And for more on this, we are now being joined by Vikas Sethi, Managing Director of Sethi Finmart Private Limited. He's joining us live from Mumbai. Thank you for joining us on the broadcast, sir. Now, let me begin by asking you, can Indian stocks sustain the sharp surge? What do you think?
Good morning, Jyotsna. As far as our markets are concerned, although we've seen a tremendous rally in the past, say, a month or so, we are trading at life highs. We just touched life highs again yesterday, and we corrected towards the end. But I feel this surge which we are witnessing would continue for a while, because there are a lot of factors which are responsible for this rally which we are seeing in the markets. Our own macro factors have been very favorable, and then post the political stability sort of, meaning although it's a coalition government, but it seems the government would be able to pursue its agenda on the reform path. So that is there. And then in the run up to the budget, since there are a lot of expectations to the budget, I think the government would not disappoint as far as the markets are concerned. So I do not expect the budget to be very populist, which the markets would not like. And there are talks that the finance minister could this time tinker with the capital gain tax and all, but then I do not feel those kind of risks are there. So I feel with the kind of liquidity which we have and the corporate results expected in a week's time, I think they would be good, and we can continue to see this surge which is happening in this market.
Right. You talked about the factors and, of course, with the budget, what do you expect from that? But what new milestones can we expect for the Sensex and Nifty indices?
So as far as our Sensex and Nifty are concerned, we've been touching new highs almost every day for the past several days. And I think we are headed for much higher levels. Long term, I remain extremely bullish on India. India is a great story. And I keep saying India, which is a mid-cap today, which is a $3.7 trillion economy, would go up to $7 to $8 trillion in the next 5 years. And there's no doubt that once our economy reaches $7 to $8 trillion or double from here, our markets would also more than double from here. So that is the kind of expectations I have from our markets over the, say, next 3 to 5 years. But if you look at the markets from, say, even a short-term perspective, I think our budget is expected. The dates have not yet come, but that is expected to be tabled on 22nd of July, as per Grapevine. And if that be so, then I think in the run-up to the budget, we could see Nifty at, say, close to 25,000 from 24,000 levels, which we are currently at. And similarly, Sensex could go up to, say, 82,000 odd levels. So that's my personal opinion, and I think there would be regular corrections in between, but we are headed upwards.
Right, we're talking about milestones and what we can reach. Now, what are the reasons for the Indian stock surge to historic levels?
Jyotsna, as I was discussing earlier, we've been seeing favorable macroeconomic factors. Our GDP growth, which was reported last month, it came at 8.2%, which was much better than what was expected. Then our fiscal deficit had come down to 5.6%. Again, we've done fairly well on the fiscal discipline front. GST collections are at close to 2 lakh crores per month, these currently. And the government's focus on capex, focus on infra, and the PLI incentive schemes, I think these are all working and leading to the surge which we are seeing in our markets. And recently, we again had a very good news. Since yesterday, Indian bonds have been included in the JP Morgan's Global Emerging Market Index. And I think that would see inflows of $30 to $40 billion in our bonds, and that will strengthen our rupee. So that's again a positive factor. Corporate earnings are expected to be good, and with the kind of flows which we have from retail investors, although FIs have not been as bullish as our own domestic retail investors and institutions over the past, say, few months. But I think FIs would also come back, and retail participation has been great, and SIP flows are continuing at close to 21,000 crores per month. So these are the reasons why we are seeing our markets surging to historic levels every day.
Right. Now, before I let you go, sir, is there a risk of sharp correction next week?
Very difficult to say. Corrections may happen any time, any moment, and I think you would need some some negative news. It could come from global events, geopolitical tensions always keep happening. So those are the kind of things which, if they happen, then we could see a sharp correction. Otherwise, since we've rallied so much over the last month or so, ever since our election results were declared, we've gone up by 7% on the Sensex levels. Stocks have gone up far ahead. I think corrections would be a part of it. And although I remain bullish over the short term, medium term, long term, but there would be corrections in between. But then I think there are people waiting on the sidelines. There is a significant FOMO factor, fear of missing out factor, which is driving this market, and any short correction is bought into. So I do not expect any sharp correction. Minor corrections will be part of it, and we could certainly come down by 300, 400 points on the Nifty, but then I feel those times would be a great time for medium to long-term investors to buy into Indian markets. I remain extremely bullish on the market.
All right, well, no sharp corrections. Thank you for your insight and joining us on the show, Mr. Sethi.